This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, October 29, 2018. Last week, commodity prices and economic reports were mostly mixed. U.S. steel production fell slightly, remaining near a multi-year high as tariffs continue to reduce imports and as higher prices starting to hurt demand. U.S. weekly oil production remained at 10.9 million barrels a day, near the recent record of 11.2 million. A lack of pipelines is now hurting production. Oil fell about $2 a barrel to $67.59 as the markets remain concerned about global slowing and as Saudi Arabia has increased production to keep the U.S. happy, thereby helping U.S. consumers and U.S. businesses. Iron ore rose $2 to $75.50 on good global demand and China demand as well. Remember that China is more than half of the world's steel production. Scrap steel #1 heavy melt remained at $313 a gross ton on good demand as well, and as word that prices could be slightly up in November on just okay demand. Hot rolled coil steel remained at $11.05 a ton on continued good but some softening that we're seeing in the market. Overall steel prices in the U.S. are now up 20% this year, mainly due to tariffs. The imports of steel, aluminum, and more continue to come into the U.S., but at a lower rate, and the U.S. government is now collecting billions of dollars of tariffs on these imports from U.S. companies. These new billions of dollars which are being collected from U.S. businesses are going to help the U.S. government make up for some of the large tax cuts that many received. Copper fell 4 cents to $2.74 as markets remain nervous about global slowing. The 5-year copper chart shows prices remain in a tight range for the past about 5 weeks as markets remain looking for direction. Aluminum fell 1.3 cents to 89.3 cents, near a 1-year low on nervous global markets and slowing housing as well as slowing automotive markets. Nucor, the nation's largest steel company, had great Q3 earnings and is on track for record annual profits, driven by a great 92% operating rate in Q3 versus last year's 84% and an outstanding 16% higher average sales price with a solid 6% higher volume. Caterpillar announced their highest third-quarter earnings in company history, but their stock price crashed, fell hard, due to management saying steel price increases due to tariffs were starting to hurt profitability. September sales of single-family homes dropped 5.5%, the lowest rate since 2016. The Northeast had its lowest rate since April 2015. After 8 years of increases of sales, they've been trending down now for about a year. Third quarter U.S. GDP growth was a very solid 3.5%. While down from last quarter's 4.2%, these numbers are closer to the 5.2% growth, which was really great 4 years ago. The economy remains very good, but there are signs of slowing. October's Manufacturing Purchasing Managers Index rose to 55.9, the strongest since May, on increased new business creation and strong employment growth. But it's actually been hurt by a slowdown in output as orders for exports shrank. Wall Street's Dow Jones Industrial Average fell a big 756 points to 24,688, losing all of 2018 gains on higher interest rates, signs of a slowing economy, and as the huge injection of cash due to the tax cuts will continue, but is not repeatable year over year. You may want to freeze the following chart. It has great data. It shows the many good things as part of the Trump bump, such as increases in earnings, employment, stock prices, business confidence, and more. Really great news. At the same time, it shows government budget deficits are up and government debt is increasing, not decreasing, despite a very solid economy. Lastly, may the victims of this week's shooting rest in peace and may their memory be a blessing. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.